So, good morning, and I'm now going to continue with our cash book reconciliation, standing orders and direct debits webinar. I'm going to go straight into Sage 200, and if you notice on my screen, we're in the cash book and we have the bank account list on the screen in front of us. As well as going through those options that I've already mentioned, I'm also hoping, if time allows, that we can have a little look at grouped transactions and also intercompany transfers, perhaps look a little bit at foreign exchange, but that'll be depending on time at the end of our session this morning. I'm actually going to start off with our maintaining standing orders and direct debits. So within the cash book option, we have an option there that's called standing orders and direct debits. We have two options available to us there, that's process standing orders and maintain standing orders. So the first thing we're going to do is actually maintain standing orders and have a little look at the options available to us. When we select that option, we select the bank account that we want to set up the standing order for, and it's only once we've done that that we can then have the Add button available to us. Now I'm going to add a new option, and I'm going to create a new regular payment, and if you notice, the first option is asking us to select the posting type. We have sales receipt, purchase payment, nominal, vatable and non-vatable payments and receipts standing orders, and we also have sales receipt, purchase payments, nominal, vatable and non-vatable direct debits. Now, depending on whether you select a standing order or direct debit, the screen varies slightly to prompt us for different values. I'm going to set up a new standing order first, so I'm going to do a purchase payment standing order. Because I've selected a purchase payment, it's asking me to select the purchase account that I want to set up the standing order for. Had I selected a sales receipt standing order, then it would ask me to select the customer account that I want to set up that transaction for. I'm going to use Atlas Ranges, so I'm just selecting that supplier account. The bottom half of the screen now is asking me for some information. It's asking me for a description, so I'm going to put this as monthly rent. We have a reference available to us, and maybe that would be an invoice number referring to that particular rental charge, and also a second reference, into which I'm just going to pop in rent. It's asking us for the first payment date, so I'm going to make this the 1st of April, and it's asking us for the number of payments that we want to make. I'm going to say we want to make 12 payments, and they're going to be monthly. We could make it monthly, quarterly, or other. If we were to select other, then it asks us for the days between payments, and we can regulate that as we choose. It's asking me to make payment on which day of the month. So my first payment is on the 1st of April, but maybe the regular payments will be at the end of the month, and I can enter that appropriately. But I'm going to make this the 1st of each month. It's now asking me for my recurring value, and I'm going to pop in there just a value of £10,000 a month. Just going to save that. So I have now set up my first transaction. I'm now going to add another option, but this time I'm going to select a direct debit, and I'm going to make this a purchase payment direct debit. Again, it's asking me to select the trader account. So this time I'll make it for Chrome Decor. It's asking me for a description, so maybe it's loan repayment. We have a reference, and we have a second reference. Again, it's asking me for the first payment date, the number of payments that I want to make, and the frequency of those payments. Again, I'll just maintain that as being the first day of the month, and is asking me this time for the total amount to pay, not the regular payment value. So I'm going to make this a regular, the total value for my loan repayment is going to be £24,000. It's asking me for the value now of the first payment, which I'll say is £2,100. It's asking me for the amount of my last payment, which I'm going to say is £1,900, and then it automatically calculates the regular payment value. So a slight difference there between direct debits and standing orders, insofar as with direct debits, you enter the total amount to pay, the first payment value and the last payment value, and it will calculate the regular payment, whereas for your standing orders, you just enter your regular payment value. Okay, now you can set up as many standing orders and direct debits as you choose for any bank account. And at the end of each month, or as regularly as you choose, you would then run your process standing orders and direct debits option. So let's process our standing orders and direct debits up until today's date. If I just say OK to that, it generates a report for me so I can see the transactions that have been generated. And we can see there that our decor has gone through as 2,100 and we've got £10,000 monthly rent to pay. It's a very expensive rent charge, but that's what I've set up. Let's have a little look at our bank account and have a little look at the inquiries, at the transactions that have been generated. So if we just go to today's date, okay, the first, there we go. So there's our rent transaction that has gone through. And if you notice that the payment type is showing a standing order, I'm just going to expand my screen so it's a little clearer for you to see. So there's our standing order dated the 1st of April for £10,000 to Atlas Ranges. The nominal journals have all been generated, and we can also see, if we look at trader transactions, that it's gone through as a payment to Atlas Ranges. The second transaction that's been generated is our direct debit, and again that's gone through for our first payment, which is 2,100, and that's gone through to Chrome Decor, and again our nominal postings have automatically been generated as we would expect. Let's process our transactions again, but this time we're going to make them through to the end of May. Again, it's generated the report, but this time, if you noticed, our rent has gone through with the same regular payment, the £10,000 monthly payment for rent, whereas this time our loan repayment has gone through as the regular payment value of £2,000. So we paid our first payment at the end of April, and at the end of May, we now have our £2,000 regular payment being processed. And again, we'll just have a little look at those transactions on our bank account. And we can see now that there's our £2,000 regular payment going through as opposed to the 2,100 first payment value. And we can also see our £10,000 regular rent going through as well. There's a few points that we need to note. Okay, so within, you can amend the total amount to pay on a direct debit and the regular payment on both the standing orders and direct debits, even after transactions have been generated. So what I mean by that is if we go back into maintain standing orders, and if we just edit one of our options, at any point we can go in and we can say that the recurring value perhaps should have been £1,000 instead of £10,000, and we can save that. So from now on, the regular payments on our direct debit will be the £1,000 instead of £10,000. It won't retrospectively change any payments that have been made. We would need to make those payments manually. We can delete standing orders and direct debits. Again, even after we've processed any transactions for those standing orders and direct debits, the actual direct debit can be deleted, so it won't process any further transactions. You can't select to miss a payment or a receipt. So what I mean by that is that, for example, perhaps our monthly rent, we have 1 month we're not going to pay our rent for whatever reason, we've been given a month's grace. If we were to go and process our monthly rent direct debit, so we've paid now for April and May. If we decide we don't want to process for June, we can't do that. If we process again in July, it will automatically catch up the postings. So you can't just miss 1 month. You have to process every month as you've set the direct debit up, and then make a manual adjustment to your bank account to adjust for that missing month. As I mentioned when we were creating a new direct debit, if you say the frequency is other, then you just have to specify the dates between the payments. We went and had a little look at our bank transactions, and we could see within the transaction that it was showing either a direct debit or standing order depending on what we've set up within the bank account. However, if we go and have a little look at the purchase ledger and have a little look at the supplier that we've generated those payments for, so we did Atlas Ranges, let's have a little look at the transaction inquiry on there. Just go to that payment. Okay, it is just showing payment. It doesn't show if it's a direct debit or a standing order or just a normal payment. It's just going through as a payment transaction on the purchase ledger. However, we can drill down to the bank and we can see there that it was a standing order that was processed on that particular transaction. Okay, so nice and straightforward. A good way to process any regular payments or receipts that you're generating through your cash book. Okay, now the next thing I want to show you within the bank account is how to actually process your bank reconciliation. Within the cash book and period end routines, we have an option in there, bank reconciliation. Again, we select the bank account that we want to reconcile. Excuse me, and then we come up with our bank reconciliation screen. A number of options that are available to us at the top half of the screen here. First of all, we have the statement date. So we're going to put in, we're reconciling up until the end of March. If you have page numbers, then you can put the page number of the bank statement that relates to this particular reconciliation. The statement opening balance you should never change. Okay, that is brought forward from our previous closing balance when we did our last reconciliation. You can enter a projected closing balance, and this is just a way to ensure that you've reconciled the right transactions within this particular reconciliation. So for example, let's say I'm expecting a balance at the end of, we'll say £900,000. Okay, the actual reconciliation is very, very straightforward. You can just go and tick each transaction that you want to reconcile. And if you notice on the right-hand side here, we've got this column, the statement value, and that will automatically fill in the value that's being reconciled. There are a number of options at the bottom of the screen here available to us. We've got Select All, and that will select all the transactions that are currently unreconciled. You have Auto Select, and that will automatically select all transactions that are unreconciled that are dated before our statement date. We also have this Reset All option. So for example, we could select all. That selected everything on our bank account, but then we realize we've made a mistake, we don't want to do that. We can then just reset all and it will untick everything that we've reconciled. If you notice, as I'm actually reconciling my transactions, my closing balance and uncleared balance are automatically being adjusted by the value of the transaction that I'm reconciling. So again, if I just do £66, you'll see that those two figures have automatically been updated to reflect that reconciliation. The bottom of the screen here, we have Add Transaction of Type. And what's really useful is that while you're in the middle of doing your reconciliation, if you realize that you forgot to add a transaction, you don't have to come out of the reconciliation to then add that transaction to the sales ledger, the purchase ledger, or whichever ledger is currently missing. You can actually do it on the fly and then carry on reconciling from that point on. So for example, maybe we forgot to enter a customer receipt. So we just select customer receipt option and it brings up our enter customer receipt function within Sage 200. We just select the customer that we're receiving the receipt from, the date of that transaction, I'll say that was the 31st of the 3rd, the reference, maybe they paid us by cheque, and a second reference if required. The value of the cheque, so I'm going to say this was for £10,000, and we can even save and allocate within this screen as well. So it's not even as though we just put the receipt on the account, we can actually do the allocation at the same time, auto allocate, save that and close. So now let's just go down to the 31st of March. And there's our receipt for £10,000 available to us for reconciliation. We can add nominal receipts, nominal payments, customer receipts, and supplier payments. At the bottom, at the very end of this particular screen, again, we have a number of options available to us. A good option is the Find button. So, for example, if I'm at the top, so I'm looking for F111. Okie doke. So I might be at the top of my screen here. We want to find something, so I'm going to look for F111. In which column do I want to search for that particular text? And it can be any of these columns. So it can be the statement value, the date, the transaction type, the reference, the receipt value, the payment value, or the reconciled status. I'm looking within the reference column. And again, we have another option. And how do we want to match that particular text? Do we want to look for it anywhere in the reference, at the start of the reference, or does it have to match exactly? So I'm going to say anywhere. And let's do Find first. So what's happened now in the background is that Sage has taken us to the first occurrence of a transaction that has that reference within the particular reference column. If I wanted to search, if that wasn't the right value that I'm looking for, we could then do Find Next, and it will then search through and find another occurrence of that value as well. Once I'm happy with the value that's been found, I could choose to reconcile it. If you notice, the statement value has gone yellow, and it's a warning. It's telling me that I'm trying to reconcile something that is dated after my statement date. It will allow me to do so. Maybe I just misdated this particular transaction, but it's a good visual warning that there may be something awry with that particular reconciliation. We have this Saved Draft button available to us. So, for example, if I'm halfway through doing my reconciliation and then maybe I need to move on to do something different, or I need to go home, I can just select to save a draft, give it a reference. So I'll call this 29th of April rec, and then select Save. So the next time I go into my bank reconciliation, for that particular bank account, it recognizes that I have a draft bank reconciliation available to me, and I have the option to recall that, delete it, or start afresh. I'm going to recall that particular reconciliation, and it's remembered exactly what I reconciled up to that point in time, and I can then carry on reconciling as standard. Once we're happy with our reconciliation, we just have to select the Reconcile the Bank Statement button to actually complete the process. Now, if you notice, I said my projected closing balance was 900,000, whereas actually I've got quite a big difference to what I've actually reconciled. If I select the Reconcile button, it's warning me to that effect. The calculated closing statement balance does not equal the projected value. Do I wish to continue? So I could just continue. Maybe I mistyped my projected closing balance, so yes, I want to continue. Or I can say, no, I don't want to continue, run through my reconciliation again to find any errors that I've made until my closing balance does actually agree to my projected closing balance. Once I'm happy, though, I am going to reconcile. Yes, I'm going to continue. And Sage will reconcile my bank account. It's going to produce two reports. It's going to produce a list of all the unreconciled cash book transactions. And it also produces a list of all the transactions that I've reconciled during this particular reconciliation process. And that's all there is to do in our bank reconciliation. Okay. Now, something that I just want to move on and just sort of show you as well, as I would say, time does allow, I want to show you the grouped transactions option. Within cash book payments and receipts, sales and purchase, we have this grouped transactions option available to us. Now, this is really useful if we want to show just one total figure on our bank account, whereas we want individual transactions on our trader accounts. Now what I mean by that is that maybe we've received 3 checks today, we're paying them into the bank account, and so we're going to have just one transaction on our bank account for our total paying in slip value, whereas each transaction needs to be shown individually on our customer accounts. What we need to do, we just select the bank account that we're making that payment into. We select the type of posting that we want to make. It could be a sales payment and sales receipt, or a purchase payment or a purchase receipt. For today's purposes, I'm going to do a sales receipt. We enter the date of the transaction, so I'm going to leave that as today's date. That's the date on our paying in slip that we're actually going to pay taking through to the bank today. We have a reference, pay slip number 111, and we can enter a description. Okay, so now let's start adding the customer receipts that we're paying in this today. So we just select Add. We select the customer account that we've received money from. We enter the date of the transaction. The reference is pulled through as our paying in slip number, and maybe the second reference we would put in there check number. We enter the check value, £12,000, and again we can allocate that to the relevant transactions against that customer account. We've also received a check from Quality Counts. Again, we're going to leave the date as today's date, but maybe their check was dated the 28th of April, but we can put in whatever date we want in there. Reference again defaults to our paying in slip number, and our second reference, we can pop in their check number. The check value, 2,500, and again we can save and allocate that particular receipt. We can keep on adding as many checks as we want to this particular transaction. At the point that we're happy, we just select Save. And if you notice here, we've got a total value of £14,500. That's the value that we want to see on our cash book transaction, so we can reconcile that at our next reconciliation. But on each individual customer account, we have their individual values. So let's save this grouped transaction. It's provided us with a report of those grouped bank transactions, so we can keep that for our reference. So now let's go and have a little look at our bank account transactions. I just scroll to the end. Okie dokie. Here we have our receipt dated the 29th of April against paying in slip number 111 for a total of £14,500. If you notice, it says there that it's a grouped transaction, so it's telling us it's not for an individual supplier account or customer account, it's for a group of trader accounts. And if we have a little look at the trader transactions, it lists all the accounts that we've entered those receipts against with their individual values, so we can see that as a reference. Let's go to our customer account, have a little look at Abbey Retail and their transactions against that particular account. Let me just show all accounts. There's the receipt that we entered against that particular paying in slip number for the individual £12,000 that's relevant to this particular customer account. So it just makes it easier for us to do a reconciliation when we're doing our bank reconciliation against one value paid in against one paying in slip, even though that receipt has been split against multiple customer accounts. Okay, now the last thing that I really want to point out to you and show you this morning is that within other transactions we have inter-account transfers. What we find is quite a common mistake is that if people are transferring money, say between their current account and their petty cash account, that what they're doing is actually going into payments and receipts. They're doing a nominal payment, non-vatable payment, and they're making a payment out of the bank account but to the nominal code that relates to their petty cash. I just find my petty cash. So bank and cash, petty cash. Now, if we were to process this transaction, what this is going to do is put our petty cash out of balance because we're adjusting the nominal code, but we're not actually adjusting the bank accounts within our cash book. So straight away, there's going to be an imbalance between our cash book and our nominal code for the petty cash. The way we should be processing that transaction is through other transactions and inter-account transfer. It's a very, very simple process. You just select your payment account, which in our example here is the main bank account. You select your receipt account, which would be the petty cash account, and you just enter the transfer details. So maybe this is petty cash for May 2016. The reference, maybe we withdrew it against a check. And the second reference, petty cash. The transfer date and the payment value. If we just save that and then close, what we will see now in our bank account, a transaction for payment dated today's date for £500. No traded transactions because it is a transfer between our bank accounts. If we now go to our petty cash and look at our inquiries for petty cash, we have a receipt against that. And again, no traded transaction because it is just a transfer between our main bank account and our petty cash bank account. Now, it's possible to transfer money between different currencies on your bank accounts. So we have a main bank account which is sterling, but we also have a US dollar account. So let's have a little look at transferring money between those accounts and see what happens. Again, I'm going to do an inter-account transfer, and I'm going to pay money out of my main bank account, and I'm going to pay it into my US dollar account. So straight away my screen changes, and it's a far more busy screen. It needs a lot more information to record the relevant details. So let's have a look at the transfer details. It's asking for a description, so I'm going to call this dollar transfer. Oops, I will spell it right. It's asking for a reference, so I'll just call this transfer. And it's asking for a second reference if it's required. It's asking for a transfer date, so I'm going to date this as 1st of April. It's asking for a payment value. Our payment value is in sterling because our payment account is a sterling bank account. So we're going to make a payment of £1,000. The receipt value is automatically calculated based on the exchange rate that we have set up within our system, $1.45472 to the pound, and hence £1,000 is $1,454. If you're going to pay a commission, you can also enter a commission value. I'm going to say we're going to pay a £10 commission value from our payment account. You can choose, is it going to be £10 from, or a value from your payment account, or is it going to be taken from the receipt account? And the commission account is automatically going to post to our bank charges code on that bank account. As I mentioned, it's automatically picked up the currency or the exchange rate that we have set up within our system. And I'm just going to save that without making any changes to that exchange rate. I'm going to make a second transfer, again to the US dollar account. This time I'm going to call it transfer 2. Still dated the 1st of April. Still for £1,000 with a £10 commission value, but this time I'm going to change the exchange rate. Instead of 1.454, I'm going to use an exchange rate of 1.2 and say OK to that. It's asking me for the nominal code to which to post my difference on exchange, so I'm just populating my cost centering department, and I'm going to save that transaction. So let's go and have a little look now at what's happened within our bank account for those two transactions. Okay. So I dated them the 1st of April. And that's the first transfer that we put through. Okie dokie. So we transferred £1,000 out of our main bank account, but we also incurred a £10 commission charge. So what we have is a total payment going through of £1,010. The nominal posting is actually showing us that our bank current account has had £1,010 taken out of it, of which £1,000 has been transferred to our dollar account, and the £10 has been actually posted to our bank charges account. Nice and straightforward. Transfer 2 did exactly the same thing, but I actually changed the value, the exchange rate. So what it's showing us here on our nominal is exactly the same. We're looking at our sterling bank account here. So it was again £1,010 that came out of our bank current account, of which £10 was a bank charges incurred, £1,000 went through to our US dollar bank account. Let's have a little look at the dollar account and see what's happened there. Again, if we go down to our transactions, and look at the nominal. Okay, I have a little bit of a technical hitch here because it hasn't shown the difference on exchange. So I do apologise, and I know why I went wrong. It's because I didn't change it on the actual transaction itself. The value of the transaction that we've transferred in here, again, is showing us the sterling value based on those particular transactions. So we had a £1,010 payment out of our sterling account, £1,000 being paid into our dollar account, which is worth £1,454 dollars. Sorry. Transfer 2, because I've actually got the dates dated today's date, again it's put it through as the same value. Let me just change that for you just to show you that working properly. I do apologise. Inter-account transfer between my main bank account and my dollar account. Transfer 3, I'll call this. CFR 3. Okay, dated today's date. £1,000. Change my exchange rate. It's 1.2 here, and it's now going to put the different converted value in. To change the value at the bottom of the screen here, and we'll have a £10 commission value. Okay, let's have a little look now at the transaction on that particular account. That's better. We can now see that the value of that transaction is £1,200, which reflects the change in the exchange rate that I entered on that particular transfer screen. Okay. With the sterling values remaining the same, sterling value, the £1,010 coming out of our current bank account sterling value. Okie dokie, sorry for that little glitch at the end there, but what we've been through this morning, we've had a little look at our standing orders and direct debits, we've had a little look at the bank reconciliation, the group transactions, which is a really easy way to make the reconciliation more streamlined when you're doing multiple transactions on the cash book, and we've also had a little look at the intercompany transfers, either between sterling accounts or between sterling and foreign currency accounts. So I'd like to thank you for your time today. Hopefully you've downloaded the handouts, and that's available to you for future reference, and any queries, I'll get back to you with answers on those queries. So thank you very much, and I hope you join us again at the end of next month when we'll have our next webinar. So thank you very much for your time.